Hello, hi. My name's Jerry Miller from Trend Signal, a trader education company. This is part of our Money Market Insight series, and today we'll be looking at interest rates and sterling and the effect of inflation on global economies. And I'm looking at sterling again. There's been some big moves the previous week, so without further ado, let's get on with it. Sterling. So, how bad is this fall? Let's have a quick look at a couple of charts. So you can see, looking at this chart of sterling against the dollar, that it's been pretty relentless, really, since the first week of August. Sterling had been under pressure quite a lot anyway, but along with other currencies, but it's been especially weak over the last 3 weeks in particular. Last week, sterling fell just under 2%. But what was more worrying was the fact that it's starting to fall against the euro, which is particularly weak in itself as well. Bearing in mind the interest rate differentials between the UK and Europe, you'd think that sterling would fare better. But I think the cause of it, more likely the vacuum in policy from the UK government with this leadership contest really extending over the whole of the summer period, just when I think a lot of consumers really want answers to how they can be able to pay their energy bills. And I think this has caused a lot of consternation in the press and within economics, economists actually looking at the numbers that Truss and Rishi Sunak have been talking about. And the fact is, they can't announce any policy until one of them is actually leader of the Tory party and therefore prime minister, and they can form a government. But it's going to happen pretty quickly. But I suspect that the UK will have to do what other countries are doing and really prop up to a very large extent the energy sector. Liz Truss has actually talked about freezing energy bills, but we'll have to wait for that by the end of the week. So far sterling, as I say, couple of percent fall against the dollar last week. It's been under a lot of pressure and will continue to be so. But I got a funny feeling that when announcements are made, there might be a little bit of relief rally there. But we'll have to wait for that to happen when it does happen. So let's have a look at the next topic, which is really what is the effect of a weak currency? What will be the effect of a weak sterling? Um, for those companies that are exporting, obviously the cost of those goods that they're exporting will be cheaper in sterling, in local currency terms. So something that a company would be exporting to the US when sterling is at 140 will be a lot cheaper now with sterling at 115. So that's the positive side. So it could help the balance of trade. But the negative side is all those commodities, resources that the UK imports that are necessary in production. The costs of those are often priced in dollars mostly. Most commodities are priced in dollars. Base metals, precious metals, commodities are all priced in dollars. The cost of those goods will be going up in sterling, regardless of what's happening to the underlying movement in the actual price of the commodity in dollars. So, what the effect of a weak currency does, it imports inflation. So it will put even more pressure on inflation at a time when inflation is already significantly elevated. And it's not something that a country would necessarily do in circumstances like we find ourselves now. In days gone by, when inflation was just not an issue, you would have competitive devaluations of a currency, where a country would work to actually weaken its own country to help its own balance of payments and improve overseas trade. But with inflation as strong as it is, that's just not an option anymore. It just isn't. So, what's the outlook for sterling? Well, at the moment, until we actually have a government in place, I think the outlook for sterling is not particularly rosy. It almost seems that parity beckons for sterling against the dollar, but that assumes that things remain as bad as they are. And there's been a lot of selling of UK gilts across the board, really, and those proceeds have always been swapped out of sterling. So, the yield on gilts has increased significantly. The 10-year gilt last over the last month has climbed from 1.9% about a month ago, and it's currently at 2.95%. So it's almost a way, it's sort of like a voting a lack of confidence in the UK economy at the moment. But I think this Tory leadership just couldn't come at a worse time, really. But I think it's likely that interest rate differentials may support sterling, but a lot of countries are raising rates sharply anyway. But I think once we've got a government in place that can actually start dealing with the effects of this energy crisis and support the consumer and support businesses, most importantly, then I think you'll see a different sort of reaction in the markets. Anyway, that's it. Thanks very much for listening.